Hey, good morning, everybody, and Happy New Year. This is the first HPS watch list for the new year, 2023. Glad to be here with you. Yeah, the markets are closed today, and I wanted to get this out. We had a nice little holiday weekend there. Hope everyone's enjoying themselves. Everyone had a happy and healthy New Year, and I wish everyone a happy and healthy New Year. We're going to start off discussing the markets. I already put out a couple videos. If you haven't seen those videos, I'd recommend watching them. I've already sent them out to members. They also went out to the public, as I typically do for the New Year, is send out everything out for free and just kind of get the good vibes started for the new year. Now, you know what kind of year we had. 2022 has been a dismal year for the markets, and people holding on to position trades. Their portfolios were probably down. And that's just the nature of the beast. Every so often you are going to get these bear markets, and they're going to, and throughout history you're going to get these times. Now, it's interesting at this point that we come into 2023. We start off next week with the last couple days. Well, we're going to start tomorrow. The last couple days of what we call the Santa Claus rally, and we're going into the January indicator, January barometer, where we talk about how January goes, the market goes. Well, this video, what we call the high probability watch list, is a section of the site, Day Trading Radio, and I'm going to actually break it down for you for the new traders out there. Maybe you're not familiar. That the video goes out every Friday, Saturday at the latest, and it kind of outlines the trades for the following week. All right, so we're going to show you where to get that. All right, when you sign in, and if you're not a member, you could head to DayTraderRadio.com. Right here, you have a nice little link here to start you off on a nice little 10-day free trial starter course. No credit card required or anything. Just click on that. Just fill in the username, email, pick a username, a password, confirm that, send it in. You'll be confirmed, and you'll get an email response, and you have 10 days of access to this great site of ours. Then go to your members area here, click on that, put in your password and your username, click on login, and you'll go right to our dashboard. And our dashboard is where all the trading takes place. Now, there's a lot of videos out there, and a lot of people already know this, so I'm not going to go into it, but I just want to go into where the HPS watch list video is. So here's the watch list. Here's the watch list video up on the top, part of your up here in the dashboard. This is the current screen. Right now we actually have the Bitcoin on because the markets are closed right now. You have the trade alert box over here where all the trades get sent out and everything goes out. And there's a lot of other things on here we'll discuss in other videos. But this is where this watch list gets posted. And each stock that gets posted to the HPS watch list, which represents HPS means high probability watch list. It takes the methodology that is taught here and applies it to stocks each week, and going forward we look at those stocks that give us, that fit our criteria for buy signals and sell signals or short signals. Now, we're mostly buy side traders, long traders, and on occasion we'll take shorts. All right, and I guess if you took a short last January and held it all the way to this January, you'd be doing real well. But that's the fact is now we're very close to the lows. We're coming into some interesting levels, and we're going to start off the first watch list. So you click on that, and you'll see a nice chart here. And these are the stocks that usually tend out. The criteria for these stocks are they have to be quality names. Stocks that you'll probably recognize. Boston Scientific, Las Vegas Sands, NCR, Whirlpool, Walmart, Square. There's a lot of different stocks on here, and we've been doing this for years and years and years, and you could go all the way back. You can see a lot of longs right here, but we do have some shorts on there also. And I'll let you explore the site as that, but you open up your what we do is you open up the chart. That chart goes out, and I'll outline the chart for you, exactly what we like and why we like it. And typically I trade off at technical levels, especially divergences and stochastics. Also some other techniques, and I'll outline your buy zone, your profit zone, your stop, and anything else, any other important notes and why I like this. And then this will update daily in real time, and if these levels are hit, you'll get the alert. If a profit zone or a stop is hit, you'll get the alert instantaneous to your account, whatever you have attached to your account, whatever email and text message you have, you'll get those instantaneous. So this is a swing trader section of this of the site. Now we do a lot of trading during the day, which represents short-term or scalping. And that's what we've been doing over the last few months because of the aggressive nature of the selling pressure and the interest rate environment and just the negative bias in the markets. We haven't been really going long, so I've been kind of holding back on the HPS watch list. Only certain stocks that make the criteria, very technical levels here. Oops, I gotta fix this right here. As you can see, you'll get the alert, and then once you get a nice bounce, and these are typically, I always call the HPS high probability watch list swing trader alerts. These are typically 5 to 7 days, typically 2 weeks, maybe even 3-week trades. And we're, our targets and our profit areas, our entry zones, our stops are all manageable inside this real short time frame. It's not a daily scalping watch list. This is something that you'll take a trade and you'll hold it probably a week to 2 weeks on average. In this case, you can see we came down to our buy zone, we moved up into our profit zone, and even though it comes back down, these are trades that you want to get out. So you'll get the alert in, you'll get an alert, oh, your profit zone will be hit. You should consider taking profits. That's basically what the email will say. And then it'll mark it off with either a yellow dot or a green dot. Green dot represents basically a trigger has been hit. A yellow dot or gold means a profit has been hit, and a red means that the stop has been hit before the profit. Now again, in this environment, very hard to go long, so we've been very cautious on our longs, and I said let's just hold off on these trades until we have ideal situations for longs. There's no reason to go against the tide, swim against the current. There's a lot of different things that we could say here that, oops, sorry about that. Up to my thing here. I'll just show you a BLI, which is kind of a cheaper stock to find up. Typically, the stocks that end up on this list are quality names, and price points are probably above $20. But every so often, one of our best setup is called a divergence setup. And as you can see, the steepness between the stochastics here and the stochastics here, and this double bottom here and this lower trend line. And so we make our buy trigger a clear breakout of the trend line, very easy to identify. And then again, if you push this, you'll see exactly, it keeps on doing that to me, sorry. You'll see that the chart will fill up. And we came right up to our profit zone and actually pulled back. And it'll update you to the current time frame right now. And this is exactly where this chart is. Actually, I kind of like this on the breakout. There's a nice pullback to the breakout and then bounce back up. But this is a rare occasion to get a cheap stock, like a $2 stock on the HPS watch list. Very rare. All right, so just understand that. Usually we do have quality names on this. So we're going to go back to the home here. Yeah, we'll take a look at like a stock that might have gotten stopped out here. We'll take a look at the meta here. And again, just looking for a breakout here. And most of the setups you'll see are kind of breakout or a divergent setup. And then again, not looking for a lot. All right, maybe a possible double bottom. That's what I was looking for, a little candle reversal there. Actually, this one got hit with some bad news, and that's probably the worst case scenario is when the market here kind of gets hit with news and it drops a lot of things. Always do a little background on any stocks you're going to get into and make sure they're not going to run into earnings. And this was earnings season. This was an earnings drop on Facebook, and that's why we almost got to our target, and then we had an earnings drop, and it kind of just dropped it, and that's why that got stopped out. And that will happen on occasion. You can see this actually making its way back up here as we go into the beginning of the first year. So basically that's what the HPS is, and this is the watch list that's going to surround that, and you're going to see some of these stocks end up on the HPS watch list. So let's get into that right now. Another thing you'll see on the watch list is when we review these stocks, typically you'll find little yellow circles here, and these are in review that we go back and you'll see stocks that we looked at previously. And why did we look at them? Probably because there's some annotation on the chart that we could look back and see that was clearly a divergence that we trade. This is a classic divergence where you got that low and that higher low and that nice move up, and that's the first pullback. And just remember, anytime you see a yellow circle on the chart, these are put in at real time. So we could always look back and say, oh yeah, we liked this stock here at this point, we liked it here, we liked it here. So just recently on JP Morgan, we liked this double bottom. You see that candle came down, kind of tested that previous low, but a much higher stochastic rotation here, and also a nice little flag here. So there was some some financials I do like, and I did take Bank of America, which is another one I took a couple weeks ago, basically off the same type of divergence. All right, there was a divergence back here, but a lot of these had that low and that lower low, even though you don't see this divergence as well as you see on the JP Morgan. I did have a little signal here, which is a little scan, a little formula I built on the TC2000. That if you are using the TC2000 or a member, feel free to ask me for it. I could give you the code for this that will help you. You could just set it up on your chart to help you identify these. There was another one here, and a nice one here on the 9.3. That's one of the reasons we got into this. All right, so Bank of America still looks really good going forward. Again, another criteria for an HPS setup is we want to not be ever taking anything when we get extended here. It's always important to recognize these things early. Say, all right, this is your low, this is your lower low. Your stochastics is set up for rotation back up. You don't want to look at it now saying, all right, there's your divergence, but your stochastics are now overbought, and I don't want to just start to take a position now where you most likely, each time you get up here, you get a move up, and then you get a move down. You get a move up to the green line here, the overbought level, and then you get a move down. Here you kind of grind it higher, eventually move down. But the odds are, once you get overbought, you tend to rotate back and pull back until you get oversold, and that market here continues to work in that kind of that mechanism, overbought and oversold, and up and down and up and down. And it's easy enough to see which way the momentum is going. So you don't want to, initiate a trade when you're approaching an overbought level. But like I said, if you did get the alert earlier when I got in, when we got in, it'll be down here further as this thing starts to have the momentum going up. So we come to the one magic question that really, the HPS really depends on. Is the market ready to go back up, or are we going to continue to trend lower and actually take out the lows on the S&P? That has a lot to do with the position trades we want and how many trades we want to take. Now, we went over this chart in the previous video, and we're looking at some levels down here. I said I like this level down here. If we could get down here, this was a target that we had up here, which we got very close to. Now there's a little target down here. If we could get down here and put in a divergence, that's something I would like. Now there is a recent divergence here. There's a slight little higher low. This candle came down. The closing price on that candle versus the low price on this candle is important. I like closing prices more than extension or lows. This one didn't have this closing price was up here. This closing price is down here. So this closing price is up here. So you actually see there is what we call a closing price divergence from this level down to this level. This is a sloppy line, but and then you have this low and this higher low. So there's a slight divergence here that we're starting to see. So going into the first of the the first of the new year, the first couple of trading days of the new year, this could actually get us the momentum to the upside. So I want to give you some trades and give you some setups going into this. But it's, we're going to see what happens tomorrow when the market opens up, and see if we did have a fast move down and we took out this, and then the stochastics didn't really curl down and we actually put in what we call a running divergence. That would be very bullish. Like I said, 70% of the talking heads out there are predicting that the markets are going to retest the October lows here. So it's hard to get in front of that. I don't want to put people in trades that that the market doesn't seem extremely ripe for a move in the direction of our trades. So let's go into a couple of these trades. All right, one thing I also want to mention before we really dig down into some of these stocks is we're closer to the lows. We're closer to the bottom, we should say, closer to the bottom than we ever been before. And what I mean by that, there's a lot of quality names out there that are at the lows. Disney being a great example. I mean, how far do you think Disney's going down? How far do you think Amazon's going down? How far do you think Google's going down? Just right there, they're all off the lows. They're also all showing little divergences down here. Now, they're not classic big divergences, but they are pretty decent little divergences. And they're starting to show up. And again, I can see these are mathematical equations that compare the previous prices versus stochastics, and kind of give you that trigger if there is a divergence. And sometimes you'll get them bunched up here, and that's kind of a bottoming process, or at least a bounce area. And we tend to see these things move up, even if it's not a bottom, but they tend to move in the direction of the divergence. So this is our second one we had in a row on Google. If we look back at Disney, you see we have a dual one here. We had one back here, had a nice move. We had a nice one here. It had a nice move here. We had nothing really, just kind of started chopping around. Here one kind of failed. But the majority of them, you're going to get the directional trade in the direction of the divergence. So that's one of the main criteria of a stock being on the HPS watch list, is having, a 9.3 or 14.3 divergence. Now, Disney, I want to circle it here because it is giving us that divergence. You can see the slight higher low. You can see the slight higher low. Not a big one, but enough to give us the trigger, and enough to know that these markets are down here. I mean, I always like to look at some whole numbers, or at least recent lows, any type of significant milestone markers on the price, especially if we go all the way back out to the COVID lows back in 2020. A lot of those stocks are almost right back down to that level. Now, Disney's not quite there. It's a little bit lower. We need to get down into probably that 79 area, which is I think is a great buy zone on Disney if it gets down into the 70s. It's 86 now. So it's very, very close to being at that level. Now, we could take a different approaches here. We could start a scale-in process to make sure we're not missing the boat if this market does turn around and this is the bottom here. Or we start a scale-in, a very small scale-in, 10% position size, maybe even a little bit more, maybe 20% position size. And if it goes down a little, then you add another 10%. And you kind of bring that cost average down into that real important zone. And that's good for quality names. A lot of people don't like the cost average in, but if you have a good area and that you're chopping around, it's a good technique. It'll work out for you. It will, unless you don't believe in America basically, and you think these are all going to zero. Then you don't want to do that. But at this point, I think the low 70s, which I should say the high mid 70s, are the ultimate buy area on Disney. But possibly this could be the area that you might want to start looking at it on Disney. Even if we're not seeing the perfect setup, I always like to point out, going back, past great setups, so you have them on your radar. Carr has been giving us those good setups. Even if we have a low a little push back up, and it comes back and just about tests the low again, but you see a much higher stochastic rotation here. Those are really good for the momentum shifting. I see that multiple times, especially right here. Even though you didn't take out the lows, relatively speaking, the price came down to that recent low area. But look how high the stochastics crossed back up here. And that was, look at the big move here. So whenever you have a nice cross back up, the price is very close to the previous low, but you have an aggressive move I call the Nike check mark instead of a kind of a rounded move. And this one gives us that a lot. So whenever we have that nice move, we tend to get follow through. So carrier global, big divergence back here, pretty decent divergence right here. We point it out to you right here. Versus that low right here, that divergence there, and then actually right here too, that reversal candle, and then it came back a little, almost tested the lows, but a much higher rotation on the stochastics here on carrier. And again, not great because, I mean, not great, just not an active stock that you get these. It just has happened maybe 3 times a year. And that's what, we go out and every week we do a search for these, and eventually you're going to get to that good swing trade. Now, are we here? Very possibly. We're back here. We have a decent candle, a higher low on the stochastic, not a real high low. Again, the steeper the divergence here, the steeper the divergence, the better the better setup. And even though this is not a steep divergence, it is a little divergence. I'm getting the signals. And it's a little reversal candle. It's also 200 period moving average. So the potential is there. Here's a ETF, a directional ETF on the bull, 3 times bullish TECL. And I've been following this one, even trading a little, and it's been working out okay. Now, I haven't looked at it back here. But right now, I'm going to just look at it and circle it because we did have again, a slight divergence, a signal divergence, and it's kind of a retracement. We kind of popped through it, came back, tested that trend line once, twice. We kind of grinded on it. Almost feels like we have a pop in this. And this is not a bad one for if you like the tech, the old FANG stocks, if you think there's going to be a bounce in it. This could give you a really good return on it because it's 3 times the, I think it'll be 3 times the Q's about. Let's just double check that. Let's double check. Let's take a look at the hourly here. And we'll take a look at the hourly between the 7th and the 13th. All right, let's take a look at the Qs between the 7th and 13th. Here's the 7th. Let's just take a look at what the return is. So we'll take the low here, just basically, and we'll take it to the gap up high, just to kind of get a read of what that price is. So that was about a 6.19% move. 6.19% move. Now we go back to the other one. Same time frame, 6.9, and we're going to go to this here, and that is 25% move. So you can see a big difference in the percentage gains on this. So if you do like tech as a basket of stocks, you might want to look at this TECL because it does give you a bigger return. And also, if it does go back down, it will give you a bigger return to the downside too. So you have to take the good with the bad. But these are good stocks to focus when the time is right. You want you have these what we call leverage ETFs, bull and bear ETFs. This is 3 times bull, 3 times the benchmark. And again, not a bad setup here. Kind of coiled up. We have a nice little retracement to the recent trend line breakout. We're going to dual signal divergence, even though it's not a steep one or a real good one. But there are some things that are lining up here, and I just want to point that one out to you in case you find yourself wanting to trade some tech stocks. This could be a way of going at it. Big returns on this if you get the right move on it. TECL, put it on your watch list. Snowflake is one that we like, and it has this beautiful downward channel. We just started to turn back up. It hasn't gotten any move yet. I'm still watching it. I mean, I would love to get better opportunities on this. Again, just on our focus list, not doing anything with it yet. Net is another one, NET. Again, all these are consolidating and just getting oversold. I just recently circled this one as we like the oversold level, and it's been slowly moving up out of this. There's okay divergence here. That's about it. I mean, I do have one I wanted to show you. I'm curious myself, so I'll just look at it for the first time. I had it written down in some notes. And DLTH here, I know it recently had some earnings. It got knocked down. Yeah, I did look at it back here on the gap down. I said anytime you get a stock that's really gotten crushed and it has a gap down, you tend to go either 5 to 7 day pullback and then reverses, or you kind of just reverse and close that gap. In this case, you could actually see that's kind of moving up. It's from 517 to 618. It hasn't taken off, but something about this one, Duluth. Clothing. I've been keeping an eye on it. Here's one of our favorites, and we like to trade this when it gets into a situation where we have everything lining up. Now, big reversal candle back here, which we like to move back up. A nice move from here. Is it time to circle this one again? Again, what's the common denominator here? Oversold. Oversold, holding the 20, momentum shifting back up. Love to get, if it came down to a trend line underneath us, that would be great. A retracement all the way back here would be great. Does it move back up here now? Again, there's a lot of reasons to see this momentum shift. A good company, Dexcom. I wouldn't be surprised to eventually see that one back at the highs. I'm waiting on it. Just to kind of give you an update on Tesla, I just drive it into the office today. I did see that there was a, let's take a look at it. I did see there was a, Tesla reports 1.31 million deliveries in 2022, growth of 40% over last year's growth. Now, I don't know what the expectations were on this. Tesla just reported 2022 year-end vehicle production and delivery numbers. According to consensus compiled by FactSet, analysts were expecting the Lamos electric vehicle business report 427,000 vehicles for the fourth quarter. According to consensus compiled, analysts were expecting 427,000 vehicles for the fourth quarter of December 1st. It sounds good, but it appears that it looks like the estimates are pretty close to what was expected here. But it might be a catalyst for tomorrow, as the news just got dropped right now over the weekend. Again, analysts are estimating 417,000 deliveries in the fourth quarter on average, 417,000. And that's basically what we got for 417,957. So, I don't know. I started picking up some Tesla. I picked up 15 shares on the breakdown the other day at 120, 125. We're down $30 on the trade. Not much. But if we can get it back above this, maybe there's a little catalyst here. I'm a little concerned that it could take out the 100 level. I think tomorrow should be an interesting day with Tesla because the numbers are out. We should see which way they, how it pushes the market. I'm not exactly sure. I don't get a feel for it. I tell you, if we did get a little pop on this, or we got a decent move, I'd probably take my profits and just move on and let this thing play out, because that $100 level does look attractive. But that's a little news for you tomorrow. Going through a couple more of my notes here. I have a small position in BSX, and I love the chart here. The chart, if you go all the way out, you can see there's a large consolidation going out multiple years, all the way to 2000, basically into 2019. We're back up to the highs. This is one of the rare stocks that are actually holding near the pandemic highs and looking good. We had a little pop, pulled back, trying to really get above that 50 level. Very strong chart. Still looks okay. Continue to hold that. Bowen's also looking very good. And you can see Bowen here slowly making its way back up to $200 as it gets to 190. It actually got close to it. It seems to be holding a slow, decent downward trend. It's recently broke. We didn't even retest it, so it looks like this one's going to go higher too. Again, these are longer term setups on swing trades. These are just setting up really good. Domino's Pizza here has a slight divergence going on right now. Just noticed it. I'm doing my scans here, bringing them up as I see them. Pretty decent turn back up. And again, this has been in a kind of a weird, tight little grind down. But yeah, you're starting to see a little better divergence. Let's circle that one right. DPZ here. DPZ. We'll circle that right there. It's a nice pullback off the lows. Kind of a 50% retracement from that low. That's what I love to see. So a nice pullback. You'd say, oh, I missed the bottom. It's running away. But just kind of always wait for that 50% retracement off of a kind of a good level. Now this is still expensive. It's got $340. Take a look at the history of the stocks. Most stocks have gotten taken down a lot from the 2020. And this one, yeah, it's been taken down. It's definitely off the highs. The pandemic lows back here at 227, 273, I should say. I don't trade this one too often, but here, I'm throwing that one at you because it is a divergence at 346. DPZ, Domino's Pizza. Well, I just went over quite a few really good-looking stocks. APD here, holding good strength. Nice little reversal on Friday's candle. Stochastics held strong. The 9.3 on the top here held very strong with that nice little pullback. Now, again, most of these are very strong. I mean, you could actually take your pick on if you're looking at stronger stocks here. Like, look at this. These are all above the 200 period moving average. Home Depot actually holding above the 200. Lulu's actually underneath it, but I did see some other ones that were holding up pretty good. We were in this one, MDGL. Congratulations if you did take this one. This was one of our FDA stocks that we were waiting for FDA approval. We got the approval. We got 130 points on this. Still trading around $300. It's amazing. Pretty expensive stocks. The better stocks here seem to be holding up pretty good. One thing I like to do is show you the upcoming earnings or any type of big news on individual stocks might be coming up. We usually look at our earnings season. We're out of earnings season, but there is still some earnings that are out there coming in. Walgreens Boots Alliance next Thursday, or in a few days here. Constellation Brands, Conagra Brands, RPM, some other ones. Not much here. Let's take a look at after the close. This is on Thursday, the 5th. Nothing that's catching my eye here. And then on Friday, there's typically nothing. I don't even know if we'll waste our time and look at Friday. Greenbrier, no. That's about it on that. The next thing we'll look at is just a calendar for the week going into tomorrow. Overnight trade, some things coming out of Europe, and then U.S. markets open up. We have OPEC meetings tomorrow. We have the U.S. final manufacturing PMI, construction spending at 9:45 and 10 o'clock. And then Wednesday we do have Chinese CPI overnight, 2:30. That's in the red folder there. And then this is going to be Wednesday, 10 a.m. We have the ISM manufacturing PMI, an important one, JOLTS job openings, And then we have the minutes, the FOMC minutes at 2 o'clock on Wednesday. Thursday, we still have some bigger numbers coming in. ADP non-farm employment change. It's kind of a precursor to the jobs report that comes out on Friday. As you can see here, we're going to have a lot of things on Friday. We have Canadian stuff too. Where are we here? There we go. Hourly earnings, unemployment rate, non-farm payrolls, and then ISM service PMI, another big one at 10 o'clock. So next Friday is going to be something. We have the minutes again. The minutes are probably not going to tell us much that we don't already know. So there is some volatility and some catalysts out there for this week. It's a shortened week. Again, today's Monday. The markets are closed. Futures open up later. But then we have Tuesday, Wednesday, Thursday, Friday. And again, FOMC minutes, CPI, PMI, jobs report, all these things are going to be good to move these markets around. In the final part here, typically we go over a best bet, or best bets. But again, with the market such, at a crossroads here, do we get a nice bounce? Do we retest the previous lows? That's going to be a big directional, wind in the sail or against us. LUV, I like it down here. I like that weakness. It is showing up as a divergence. These are the recent divergences on the S&P 500. Just to take a look at a few of them. I'll go through them real fast. I have 26 of them right now. And they've been averaging over 20 over the last few days. And that's another indicator of myself. I track all the divergences on the S&P 500. When they get over 20 to 30, the market tends to react to the upside or in the direction of the divergence. In this case, these are buy-side divergences. So we have a lot of these buy-side divergences setting up. Intel, good, stock, MGM, a good cross-section. Even Paramount Global, Marriott, airlines. It seems like a lot of travel, stuff like that. Alaska, all the airlines have set up. Even Apple showing up as a divergence here. And another thing the Apple has is what we call a coil stochastic channel breakout setup here. See this series of lower highs? This is really important because the breakout of this tends to give us a breakout of the underlying channel that this might be in. Now you could just imagine this pivot going down to this pivot and then drawing a parallel line. It's a pretty steep channel. It's kind of sloppy. But it's not bad. It's, I like the setup here. I don't see myself getting into Apple right now. The airlines seem to be a better setup. Some of the chip stocks are setting up also. So we did see some chip stocks, some travel stocks. Regeneron, Goldman Sachs, good names. Some big names too. Amazon. Look at that big reversal on Amazon. Let's talk about Amazon for a second. We still need to have holiday sales be announced on Amazon. I want to circle this here because we've been waiting for that, and I actually had an option on this, hoping that we were going to move, and it didn't really move. I suspect it's going to move now that it closed right around 84. I expect a pretty decent move next week on Amazon. $84 at this one, and remember, it's just not a retail stock. It's also cloud computing stock and storage stock. There's a beautiful divergence back here in June, which most of these stocks, and then again, you can see the nice little move up. But look at the nice move down here. Organized flow here under the 20, under the 20, under the 20. We're due for a pop through the 20 to the 50. I like the Amazon down here. For whatever reason, I like it. I like the reversal. I like the divergence. I like there's a little coil here. And I like that we haven't retested, and there's a nice gap up here at 104. Any lower levels down here is this is one of the stocks that would be scaling in anywhere in the 70s. Anywhere in the 70s, I'd be scaling in on Amazon. It looks excellent down here. One of the best bets going in. Again, Google, the same thing. Anything down in the 70s would be good. Are we close to a bottom here on Google? CVS, all these here are showing up on my scanner. So we already talked about Disney. Scale-in process on Disney should be taking place anywhere in the high 70s. Okay, that's a 24 out of 26. Royal Caribbean. Public storage, no. Genuine parts. Nice pullback, nice divergence on genuine parts here. We'll watch that one. No position on that. And that's going to be the wrap up here. I wish I had something definite for you, but markets are still unsteady. I gave you my best bets. Some of the Amazons, the Googles, Goldman Sachs, JP Morgan, Bank of America, and the ones that we talked about earlier. Some of the airlines looking good. Hope you enjoyed that. I'll see you guys in the market. And we always kind of update this, as we go. If I do see a good HPS, I will update that and put it up on the charts. All right. Have a good day off. I'll see you guys in the markets tomorrow. Don't forget we have a sale going on. It's a good one. It's an end of the year sale, so take advantage. If you're not a lifetimer, you could do that. If you're not a member, I would take advantage of that. Just head over to DayTraderRockStar.com. If you head over to DayTraderRockStar.com, I'll show you fast here. People are already done with the video by this time. Not that, Johnny, not that. Come on. There we go. You'll see pop up. Coupon code is Jan23. $500 off on the lifetime. Normally it's $14.95. You get it for $9.95. You get everything included. Tradeometer, high probability setups. Everything's usually basic with all the packages, so you could also get a lot of this stuff with different packages and stuff, including the everything, the monthly, 3-month, yearly, or lifetime package. All right. Have a great one. Happy New Year again. I'll see you guys in the markets tomorrow. Be safe and have a happy and healthy New Year.